Welcome everyone to this webinar for Jupiter Energy, which trades under ASX ticker code JPR. Shortly, I'll introduce Jupiter Energy Chairman and CEO Geoff Gander, who will provide an update on the company's activities. I note this is one of the first times in many years Jupiter has done a promotion of this type. And from talking to Geoff, I understand it is because he and the company now feel the time is right. After many years of toiling away in the background, they're ready to provide a current and prospective shareholders with a comprehensive plan of what's ahead. You could say the company is now investor ready. Jupiter recently reported an increase in oil reserves across its 3 oil fields located in Kazakhstan. The company also has plans to significantly increase its oil production during calendar year 2024. At the completion of the presentation, Geoff and Non-Executive Director Keith Martins will be on hand to answer any questions. So, as the presentation is occurring, think about what questions you would like asked and submit them in the Q&A box at the bottom of your screen, and I will put them to Geoff and Keith directly during the Q&A session. Okay, let's get started. I would now like to introduce Jupiter Energy Chairman, CEO Geoff Gander, who will run through a formal presentation and together with Non-Executive Director Keith Martins, be on hand to answer any questions you may have at the end. Geoff, over to you.
David, thank you very much, and welcome everyone that's attending. I hope you find the next half hour or so interesting. And thank you, David, and your team for hosting us. So as David's alluded to, this presentation is really an update for people that have either followed the story in the past or have followed it more recently, or those that probably maybe not even familiar with Jupiter, regarding our operations in Kazakhstan and our plans over the coming 12 months to ramp up production on the back of a significant upgrade in reserves, which we released information on recently. Moving through the slides, next slide is the usual disclaimers, which we'll run through. This is more of a sort of quick summary, elevator pitch, I guess, of where we're at. Jupiter is the 100% license owner, so we own 100% of the licenses that we hold on 3 oil fields in Kazakhstan. And those licenses are valid through to 2045, 2046. So plenty of time left in their life and the beginning of our what we'd call our full commercial production phase. We just recently, mid-January, released a CPR that was put together by Sproul, a group out of the US, Canada. And they, I think, confirm what we probably already knew, but certainly it was good to confirm to the market that the prospectivity of our oil fields is real. And in fact, they came up with a 2P number of about 36.5 million barrels recoverable. And as these CPRs tend to do, they provide a sort of discounted value cash flow and valuation of the project. And based on an NPV with a discount of about 20%, our project had an underlying value at the moment, or in their view, an underlying value of about 180 million USD. So if you take that on face value and then compare where we're at as a company, our market cap at the moment is, I've got 29 million there based on 2.3 cents a share. I think we're down at maybe 2 cents today. So it's around the 25 million Aussie mark. We've got balance sheet debt of around 25 million Aussie. So all in all, we're in the low 50 million Aussie in terms of our enterprise value, which obviously runs through in terms of valuations in USD, if we're able to compare back to that after-tax NPV of 180 million, sort of more like $30-odd million. So a significant discount to the NPV valuation. And if you look at it on a dollar per barrel, whether it be Aussie dollars, at about just over $1 a barrel in ground, versus even regional sales in country recently of more like $4 Aussie. So whether you're comparing to just a simple NPV valuation against enterprise value, or you're looking at a dollar per barrel's evaluation against recent sales, anyway you cut the cake, we seem to be trading it at a significant discount. And that's really largely due to probably people not understanding our story or aware of what we're doing. So hence, this is the beginning of a more proactive campaign to try and get information into the market. At the moment, we're producing from 4 wells, and we produce about 640 barrels a day. and we're cash flow positive at an operational level. So if we look at last year, we probably in the end had excess cash of about $2.5 million US. And we put that towards various things in terms of investment in gas utilization infrastructure, workovers, and in fact, we'll be making a repayment to our bondholders to reduce some of that balance sheet debt in the not too distant future as well. So we're certainly making a bit of money. Whether or not that's enough to accelerate aggressively the development of the field is another matter, but certainly we're cash flow positive, which is a good position to be in at the end of the day. You've got to be making money to survive. This year's outlook, though, is to be fairly aggressive in terms of our planning, and that's to drill at least 2 new production wells and remediate 3 of our existing wells. And we believe with success on those on each of those fronts, we'll push our production to around 1,500 barrels a day, so doubling plus by the end of 2024. So that will be hence the title of the presentation, ramping up production, that we see as reasonably significant. Now, the good news with that is that the fixed costs of running the oil field are obviously, largely covered at 640 barrels a day. So by producing, ramping up production, doubling plus, yes, there's additional costs of a few more operators and stuff, but the bottom line is the fixed costs don't go up an awful lot. So we should see a decent amount of that sales revenue dropping to the bottom line. Ultimately, I think the best liquidity event, the best exit strategy, whatever you want to call it in country, is to build yourself up to a position where you're attractive to one of the majors that's looking to enhance and grow their reserve base. We've got several majors in the Mangostal in operation close right next to us in some cases or nearby, and they vary from Chinese to Kazakh to Korean national. So we're certainly a company that's well positioned, and I guess our challenge now is to ensure that our production levels get to a point where we're clearly cash flow positive, able to look after ourselves, keep drilling wells, and then hopefully someone will come along and say, well, maybe it's time for you to move on. So moving to the next slide. Quickly on the board and management, Kazakhstan is not the easiest country to operate in. I think there are a lot of countries out there that are tricky, and Kazakhstan is certainly one of those. So the board and management is quite important. So if I quickly go through why this is reasonably a significant team. I've got Keith on. I'll start from the far right with Keith, and Keith's attending today and will be available later, as David's alluded to answer questions in Q&A. So Keith's based in Perth, was instrumental in finding the asset base in Kazakhstan. He traveled with me to Kazakhstan in 2007 when we first had a look at what was available there, and then was involved in shooting 3D and picking drilling locations and drilling our initial wells, etc. Keith then, I guess, went away to do other things as we were doing less in country over the last number of years. But more recently, I approached him again and said, look, things are changing. We're now going to be quite busy. We'll be drilling more wells, CPRs, etc. And he kindly joined us again as now a non-executive director and heavily involved with me in terms of the planning for this 2024 drilling campaign. Alexander Kuzev, based out of Moscow, has run a number of oil fields, very operationally oriented guy, run a number of oil fields in the region, in the Soviet, ex-Soviet region, including Kazakhstan. So very helpful to have around, and often comes to Aktau and helping me with planning of work programs, etc., etc. So extremely valuable. Boltobek Kvondikov at Kazakh, been in the industry a long time, extremely helpful when it comes to understanding the lie of land in the capital, Astana. Astana is a bit like Canberra, a lot of obviously the political and governmental base, and this is a sector that is reasonably tightly controlled by the government. So understanding the lie of the land in Astana being very important. So that's where Boltobek's value is. Alexei is Waterford, our major shareholder. We'll touch on shareholders shortly. Our major shareholder and represented on the board, more of a finance base. And then myself, obviously Australian, but frankly speaking, to operate successfully in Kazakhstan, you've really got to spend quite a bit of time here, particularly when you're starting to sell oil and trade That's an area you need to tightly control for obvious reasons. And so I spend quite a bit of time here. A lot of the traders and stuff are based in Almaty, which is the oil capital, which is actually where I spend. I have my base, and then and then obviously we got our operations in Aktau. So I spend quite a bit of time in Aktau and Almaty. Doesn't mean I don't get back to Australia, because I do, but I spend a lot of time in country. So that's kind of the board, and it's quite hands-on, as you probably gathered. In terms of capital structure, we've currently got about 1.27 billion shares on issue. So quite a few shares on issue, but are very, very, very illiquid. I think I'd be the first to admit that, and something that we've clearly got to address, and probably will get questions on that today. And the reason it's so illiquid is that 80% of the stock is held by the two major shareholders. In fact, you add in a couple more shareholders / debt holders, you're up to 90%. So there's really not a lot of free flow, and something that we will need to address as we now sort of embark on this more sort of proactive campaign to increase the visibility of the company on the capital markets, and that's understood. I've touched already on the market cap and the enterprise values. I mean, as I say, we're in the sort of low 50s when you add the market cap and our balance sheet debt together. Yeah, that's where we sit today. We think obviously significantly undervalued. In terms of the balance sheet debt, that's held by the major shareholders. So the shareholders and the debt holders are one and the same. So there's a good deal of alignment there. People that have followed the company will note that we had a significant debt restructure in December of 22. I think balance sheet debt at that time, including accrued interest, was at like $75 million. The bondholders wrote off all the interest and converted a significant amount of the debt to equity, hence the 1.27 billion shares on issue, because it was something like 153 million prior to the debt restructure. But what we did is obviously got with the balance sheet debt down to a much more manageable level. And as I touched on earlier, we'll start to slowly but surely repay that down from the proceeds of oil sales. But probably at the end of the day, the bulk of it will be there when the asset's sold. And that's kind of understood by the shareholders / debt holders. As I say, they're one and the same. So the debt's unsecured and it's held by friendly hands. I think it'd be the best way to describe that. Moving to the next slide. Bit on Kazakhstan for those that maybe are not that familiar with the country. There's not a lot of listed entities that have operations there. I think looking at Saratogan, and hopefully I've said that correctly, ASX code SGA, was a reasonably recent graphite play that was listed. It was listed and has assets or licenses there, but there aren't a great deal of companies based there. And so I'll just run through it. It's been an independent republic since 91. It was part of obviously the broader Soviet Union with the breakup. And I think there'll be very little doubt that it would be classed as the best performing of the stans post the breakup of the Soviet Union. I mean, obviously helped a lot by the fact that it's sitting on major oil reserves and was able to monetize those with the likes of all the majors, Chevron. I think until recently, a third of Chevron's global revenue came out of the Tengiz field. So, and it's still a significant provider of revenue to that corporation and other major, whether they be Chinese, CNPC, ENI, Italians, Shell, Total, Exxon, it goes on. They're all players there. So the Kazakhs were able to take advantage of that, and I think also managed the relationship with Russia, China, the West fairly successfully, and were able to grow the economy as a result. So good, well-performing, quite westernized these days in terms of the country and the facilities and everything that's available. And as I say, it's a country with proven oil. I don't think the challenge is finding oil. It's more the monetization process that can be tricky. For a junior like us, moving from this exploration phase where we first went and shot 3D and drilled and found oil, moving to full commercial production is challenging, has been challenging, predominantly because there's a lot of regulatory milestones to take a field from one phase to another. And during those phases, they suspend your production. So you don't have any chance to generate revenues. So it can be tricky unless you're well funded. And obviously juniors, as most of you would know on this webinar, tend to it's hand-to-mouth sort of feeding. So we've been able to get through it, and mainly and only really because of a committed major shareholder. Waterford have been extremely helpful and resilient in terms of providing the funding we've needed to get to where we're at. But anyway, here we are today. We've successfully navigated our way through to full commercial production. 2023, that was achieved. We're now in a position where we're producing oil at optimal levels. We're able to sell into the domestic, the export markets, depending on where the best netbacks are. So we're sort of a proven player now. And I guess after 15 years of experience, I think we're regarded as one by the Kazakh authorities. No longer have we got this sort of, at times the relationship, was difficult sometimes. But these days, I think we're regarded as a player that's been around a long time. We're proven, we're an employer of people, we're investing in the country, et cetera, et cetera. So we understand the landscape and how to succeed there. So the next slide. We're listed on the ASX under JPR. I think we've touched on that. We've been, as you probably gathered, operating in Kazakhstan since 2008, and we have a number of licenses, three oil fields there. The Sproule CPR, released in early January and effective from 31st December 23, confirmed 1P, 2P, 3P numbers as set out there, 14 and a bit, 36.5, 46, almost 47 million barrels in recoverable in those three categories. So I think that was pleasing to see that result confirm what we already knew, I guess, but it's always good to have a third party come in and do that. And interestingly, when you compare our 3P number to the Kazakh Russian GOST, as you know, the Western SPE at PRMS standards are a little bit different from the standards they use in places like Russia. So GOST is the standard there, but even C1, C2 numbers, these are Kazakh approved reserve numbers, are at 52 million barrels. So 3P and C1, C2 looking very similar, which is what one would expect that to be the case. So numbers are good, and hopefully, whether the parties looking at us in the future rely on GOST numbers or they rely on Western numbers, the numbers are fairly similar. In terms of the 2024 work program, we've got approval to drill up to 4 wells. So that's already in place. And our expectation is to drill certainly at least 2. And at this stage, we're looking to drill wells on the Akar East field, which is one of our 3 fields. And I'll have a map shortly to show you there, but it'll be on proven reserves area. There won't be exploration wells or anything fancy. It'll be drilling in areas where we know there's proven oil. In terms of production, commercial production, we're producing from the Akar North field and the Akar East field. And both those fields are in full commercial production and subject to both domestic quotas, which we have to abide by or are obligated to sell a certain quantum of our oil into the large domestic refineries. And then the rest of it, we can do what we want to do, whether it's into mini refineries in the domestic market or into the export market. And that really is driven by where the best netbacks are. The West Jetabai field, our third field, is in full commercial production, but it's still in what they call a preparatory period. And what that is that as you move from exploration to full commercial production, they give you time to get your infrastructure in place. And they call that the preparatory period. And we've all our fields have obviously gone through that. As it turns out, all our fields are now have all the infrastructure required to be in full commercial production. So in theory, the West Jetabai field could also move to the same status. The reason we've left it in the preparatory period until the full period has run through to, which will be the early September of this year, is that we have a little bit more flexibility on where we can sell our oil when that's in the preparatory period. And we've chosen to keep that flexibility. Mainly because the geopolitical climate, and what I'm referring to there is clearly the Ukraine-Russian situation, has meant that the export market or the pricing in the export market is probably not as attractive as it normally would be. And therefore, there's no compulsion, I guess, to get the West Jetabai field out of preparatory period into full commercial production until the agreed timeline. And why I make that distinction is that when a field's in the preparatory period, you can't sell into the export market. But as at the moment, that's not a key criteria for us, and therefore we've left the West Jeddah field as is. But that will be that will complete its paperwork and process, and will move into full commercial production in September of this year. So all our fields are basically ready and have all the requisite infrastructure in place. Production levels are about 20,000 barrels a month, as I said earlier, and we sell, as I say, a mixture of oil into the domestic export and export markets if that's what we choose to do. As it turns out, right here, right now, we're selling oil into both the large domestic refineries, and the remainder of the oil we sell into what we call mini refineries, which are based locally in Aktau. They collect oil from the wellhead, so there's a savings for us in terms of transportation and logistical costs, and means that the netback is probably more attractive, or is more attractive. So all of our oil is essentially sold into the domestic market at the moment. All on a prepaid basis, so there's no risk there. We always pre-sell our oil and have cash, always, or are in credit, or the traders are in credit. We're ahead of the game in terms of if there are any difficulties. But in the main, there's always the exceptions over the years, but in the main, traders have been actually pretty good to work with and pay their bills, and we've never had any troubles. As I said before, export sales were limited in 23 for us because it just didn't make sense. But we're monitoring that on an ongoing basis. I talk to the export traders every month, always checking in on their pricing. And at some point, I'm sure it'll become more attractive to go back and sell some of our oil into the export market as well. Next slide. Just quickly, in terms of reservoirs, I touched on Kazakhstan, lot of oil, and that's one of the reasons it's done so well since it's becoming a republic. And there's three key areas where oil's based, reservoirs, I guess. The pre-Caspian, which is known for some, Tengiz, etc. The central Kazakh basin, which is more to do with some of the early Chinese purchases when they came and bought companies back in early 2004-5 period. And then there's the Mangistau, which actually has been the oldest oil producing area. So the Uzun field was used, aggressively during the Second World War, for example, as a major oil supply to the Soviets, and has obviously continued on. And Jeddah was discovered in the 60s, and again is still a major producer. So big oil fields in the area have been discovered and been operating for a while. And then more recently, the likes of Jupiter and others have discovered, smaller fields in the same area. But the good news is that obviously with the bigger fields already there, the infrastructure in the Mangistau is significant. So you're not in the middle of nowhere with, problems in terms of transporting your oil or anything. The pipelines are nearby. Our ability to get our oil into the pipelines is pretty straightforward. As a result, we've been able to monetize. Once we've got all the approvals, which was the key thing for us, and got the infrastructure in place, monetization of oil has been reasonably straightforward for us. So that's a little bit on where we're based in Kazakhstan. Next slide is just a quick map, and it makes the point I touched on before. Uzun, Jeddah, big fields, number of smaller fields in the area on the way through, and then there's us. As I say, you can see the pipeline leading through to the port of Aktau, and then on from there. So, as I say, moving oil is not a problem. Getting access to services is not a problem. Aktau is a reasonably significant city, so all the usual suspects are there in terms of drilling operators and the like. So it's a reasonably straightforward onshore operating environment for us. Yes, you've got to manage your field. Yes, you've got to ensure that your drillings and completions are handled by the right sort of people, and you've got the right people in your own team to supervise any contractors you might be using. But it's not that complicated. The difficulty has been getting to the point where, as I say, you've got all the approvals to be able to monetize, which fortunately we've now achieved. So moving on to the next slide. Touched on it already, our production, and if we just look at remediation as the first thing, which is probably where our first focus will be this year. Just looking at the wells that we've got plans, workovers and whatever remediation plans for this year, we think we can push from 640 up to around the 1,000 barrel a day mark. And then we obviously want to drill a couple of wells to then push that beyond that. So our production levels, I think, will grow this year regardless, but it would be good to be able to accelerate that production by the drilling of new wells. CPR I've touched on already, and the valuations, the Kazakh reserve-based numbers similar, and I think I've already said that the drilling program focus is to obviously increase production. We've got 4 development wells approved, production wells approved, and we're planning at least the drilling of 2 of those. So next slide. Little bit of a history. Our total area, moving across the screen, Block 31 is the sort of the generic name we give our area. It's about 123 square kilometers. We've shot 3D over the entire area and surrounding areas as well. So we've got good 3D coverage. We obviously explored and found 3 oil fields, and then we went through this trial production phase, which is it's an interesting phase where you're able to produce at times, but not at other times. And over a period, you're able to. Well, the idea is that you get the infrastructure in place that enables you to achieve the key thing, which is gas utilization. So I will explain that a little bit, and moving to the 3rd column, the production license. So you move from exploration or trial production into commercial production, and our license has a 25-year commercial license with the oil fields, which run, as I've said there, from through to 2045 in the case of Akar North and Akar East, and 2046 in the case of West Shetabai. The key thing, though, is gas utilization. Essentially, Kazakhstan bans any flaring of gas when you're in full commercial production. So basically, you've got to have the infrastructure in place that enables you to utilize or do something with 100% of the associated gas produced when you're producing oil. So yes, you can use some of that on the field for power and the like, but obviously once you get operating and start producing a decent amount of oil, you've probably got more than enough, got more excess gas. And the idea there is that you've got to have some sort of way of dealing with it, and essentially providing that through to gas pipelines and some sort of processing facility and the like. And that comes at a cost. And so that part of our approach has been to break it into 2 stages. Last year was stage 1, and anyone that's sort of followed the story will know that we talked about stage 1 and stage 2 gas utilization. Stage 1 being the use of gas to electricity generators at the wellhead, which is what we're doing at the present time. But the objective was stage 2 was to integrate into existing facilities that are already being built in the area. And that's the process we're now running through. So we're just finalizing all the approvals. We're pretty much done with that. There'll be some news on that in February, I guess, and that'll allow us to then integrate all of our gas, all of our various wells into a broader centralized facility. And as we bring on new wells and therefore produce more gas, that gas will then be also piped into that infrastructure. So extremely important milestone for us, and we believe that we've done it in a very cost-effective way. So gas utilization is an important part of the story. Until you've got gas utilization dealt with, you can't sell into the export market. That's the sort of chicken, egg, or carrot and stick approach that's used. So clearly, we're now able to sell into export. As I've said before, unfortunately, right now, the export market is not as attractive perhaps as it normally is, but I'm sure that will change over time. And it's important. It's an incredibly important tick, though, in the box. If you're looking to have people look at your asset, they expect to be buying an asset that has export oil capability. So it is an important feature, albeit we're not necessarily selling a lot of oil into the export market at the moment. So production levels I've touched on, 640, our ability to increase both via remediation and then obviously upping that again through the drilling of new wells during the year. Next slide. A little bit of just a summary of in a blown out sense of the 3 fields and where the reserve base is, and also some of the opportunities in terms of extensions nearby, both to the north, the south, and the west. So we're conscious of trying to grow the permit area over time. It hasn't been a big focus in the last few years. The focus clearly has been to get to full commercial production. And that's probably still the focus in 2024, to get production up to a level where, we're spending out a bit more cash. But that said, there's no doubt, and particularly up in the north there, you might see that with the orange Akar East field, there's a green area, Prospective Reservoir. That's one particular area that we've had our eye on for some time. We've got some good 3D over that area, and that's certainly a well that we'd like to drill at some point in time, but that's probably not for 2024, but certainly something that we're looking at. And as I say, expansion onto the west, you can see there's a northwest Yetabai oil field there. That's an area, a field that was discovered some time ago. A field we actually looked at one point in terms of potential acquisition. But in analysing that field, we also analysed the surrounding area, and again have quite a good understanding of that potential license expansion in the west. So we'll look at that in due course as well. Next slide. So quick wrap up, really, where our focus is for 2024. Production, looking to produce more oil via drilling new wells and remediating our existing wells. The locations of the new wells will all be, as I've said before, touched on, will be on proven reserve areas. So we're not doing anything particularly adventurous there. We're using 40-acre spacing in terms of location. And as I say, success should see us double plus our production this year. Gas utilization, very important. Stage 1 completed. Stage 2 will be completed this year, and that'll be an important part of our story as well. CPR, confirming our reserve base, valuation showing that we're cheap, and next steps being, as I said, to work over existing wells and also drill new wells. So look, it's a pretty straightforward story, I think, but it's been a complicated journey. But here we are. I think we've weathered the storm, as it were, and we're looking forward to now if there's interest in the market, embarking on a more proactive campaign, working with the likes of David and others to try and get the story out there and ensure that people are brought up to date in a more regular way with what the company's doing. And it's a two-sided, you've got to put the effort in as well to get market recognition. I understand that. But as I think David touched on very early, it's a question of belief in market, being the story being market ready. And I think now the story is market ready, and I'm happy to promote it on that basis. So that's it.
Geoff, thank you very much. A great presentation, comprehensive presentation. As you say, for a lot of shareholders, bringing them right up the curve quickly to where things are at and what has been happening behind the scenes and away from the glare over many years to get the company to the position where it's at. So I'd like to now also introduce Non-Executive Director Keith Martins, because there may be some questions to be thrown at him. But before I do, there are quite a few questions coming through. Some of them are statements, so I'm just going to read them verbatim. Thanks for organising today, and congratulations, Geoff and team, on the reserves report upgrade and EV valuation of, as they've put it, 180 mil USD. However, our market cap is a very awful, pardon, 25 million, approximately 1/10 of valuation. Yes, people not understanding our story agree. So what is the company doing right now to present the report to brokers in Oz to get buying support and volume into the stock?
And a very good question. So this is the beginning of that. And I have been talking already to a few brokers. And I think, the reaction is very much liquidity. Geoff, how are we going to deal with that issue? Because that is an issue that we understand is there. Lots of shares on issue, but not many available. And I think all of us on this call probably understand enough about trading to understand the importance of liquidity. The last thing you need is a stock that's hard to get in and hard to get out. So we need to deal with that, and we will. In terms of the valuation, I absolutely take your point. I think market cap, you've always got to consider your market, the debt as well. So I do think you need to consider EV. But even so, whatever you want to take it doesn't matter. There's a considerable gap between the market cap or the enterprise value and what this asset's worth. Whether you take the NPV from a CPR or whether you look at regional sales and take a dollar per barrel value, it doesn't matter. There's a gap. So I think, you know, there is a story there. I think it's, as I say, the issues that we've faced in country are dealt with. We're in good shape. So now we've got to move on, get a broker behind us or two, or whatever it takes, get some liquidity, got some ideas about how to address that, and then we'll go from there. And I think the good news about a tightly held register, though, guys, albeit that this is really tightly held, but a tightly held register is also good. You know, once things move along, they move quickly. So I think what we've got to do is turn a negative at the moment, which it is, into a positive, and do it in a smart way. And we will work on that, and definitely we've got the capacity to do that. But we do need to find a broker or two that likes the story, and that's part of my job at the moment, is to do that.
The question for you: one of the founding fathers of the company and identifying the blocks and the opportunity, back when that process started and the journey began, did you think the company would get to where it is, where it's producing oil from these fields and successfully operating in Kazakhstan?
That's for Keith, is it, or for Geoff?
It is for Keith. Yeah, sorry.
Yeah.
Oh, sorry. Yeah. No, and from a geological point of view, Kazakhstan was always attractive because there was a lot of mid and small sized oil fields that weren't really addressed by the current players in the area. So from the point of view, it was just a matter of securing the block, getting all the regulations done. But the technical side was rather easy. Some of the fields were quite easily identified as potential. They still had to be drilled, of course, and proven up, but they were, you know, on trend and between oil fields and lookalikes to them. So they were just of modest size. So once we shot the 3D and realized they were a bit bigger than we had supposed before, and there was additional structures that we hadn't seen at the start, it was rather straightforward to identify the fields and prove them up. It's harder to get all the regulations done than the technical.
I was going to say that there's probably a yin and yang to that story where, Keith, the easy bit is the identifying and understanding the structure. The hard bit, which Geoff has spent, as he's mentioned in this presentation, a number of years on in country, is actually getting through the process to get them into production. So I think certainly commendable on both fronts there. Keith, just one other question. What's the size of the opportunity, do you think?
Overall, there's zones that have oil in them that we haven't addressed, that we haven't put on production, that will probably take hydraulic fracking to bring into production. Those have not been touched. There's additional stratigraphic zones that are probably trapped pods of oil that haven't been addressed. Overall, I see the potential is about 3 to 4 times our current reserve is a reasonable number for what's probably in the block once you turn over all the rocks and explore the block properly. So, but that said, there's a number of on-trend areas that are sitting fallow and no one's looking at that. If Jupiter got the cash flow to take on other blocks, there's many other opportunities that are similar that if we wanted to, in an exploration sense, grow in that sense too. So there's no lack of geological potential in the Mangostal Basin.
Keith, question for you. Talk us through the difficulty or not of the debt restructure process and how you've been able to reset the balance sheet in such a favourable way.
Okay. Well, I mean, obviously, the bulk of the debt was held by major shareholders. That tends to help. So you've got to, obviously that, Waterford made a decision in about 2014, 2015, when it became obvious it was going to be difficult to get through the phase that we had to get through to double down and get behind us. So At some point, though, clearly that had implications, in terms of accrued interest, particularly over time. So we sat down and said, well, this is not going to fly. You can't, all this accrued interest, it's messy, messy, messy. We've got to work out a way of getting this back to something that the market is palatable. And you as a shareholder and a debt holder, but you as a shareholder, can ensure that we have upside here. So that was really the process. And the other three bondholders, so they were the major bondholder, the other three, again, came with a background of understanding, the business people understood the realities of the situation. So in the end, it was agreed that we'd write off all the interest, all the accrued interest over the period was written off. And then with the debt, we'd take a large portion of that and convert it to equity. And that was done at a price of 3 cents, an issued price, effective price of 3 Aussie per share. And then obviously the remainder would sit on the balance sheet and is currently interest-free. So the bondholders/shareholders have been extremely flexible but sensible, really, in terms of ensuring that the company's got to, assuming we delivered, which is, I think we have, in terms of getting through the regulatory period, getting the wells back, producing oil, blah, 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 all the things that we've done over the last, basically in 2023, they backed us at the end of 2022 to do the debt restructure. So hopefully we can reward them over time in terms of their ability to also obviously get the remainder of the debt repaid over time, whether it be at the end of the process, either the sale of the asset or just from cash flow. And I think it'll be a combination of those, and also get a return on their equity per se, because obviously at 3 cents a share, today it doesn't look so healthy, trading at 2, but I think there's plenty of upside there, and I think the CPR has proven that. So yeah, Resilient needed to have business savvy, understanding, resilient shareholders, bondholders, and that's what we've got. So we've been very fortunate in that regard. If we didn't have that, we would not have survived. Simple.
Now, and commendable both from a management board perspective, but also the major shareholders taking a proactive view in relation to the total shareholder group as opposed to what was in their best interest, I think is pretty commendable and probably rare in a lot of cases. So well done there. A couple more questions. So can you give any flavour around recent block transactions, sales in the area, and how this may flow through to Jupiter?
Yeah, so there was a period there where there wasn't a lot of activity in country, to be honest, and it didn't matter if it was a Mangazao or anywhere else. There just wasn't a lot going on, but that's certainly changed, and there could be a few reasons for that. But in direct answer to your question, the most recent sales in the area, in the Mangazao, was the sale. OMV had several fields that they decided to exit out of as part of a broader diversification program for the company as a whole, which is, as people would know, quite a large entity, and they sold their holdings to a local group, and that was sort of in excess of $5 US. I'm using US now, $5 a barrel. So that was pretty healthy for OMV. Now, what was the positives of that? What if you look at why would that have been? Well, clearly a field that had some oil. Not it was toward the end of its life, but it still had remaining oil, but had all the infrastructure in place, and that was obviously important to the parties buying. So as I say, it was export ready, had all the infrastructure, had all the pipeline connections, whatever. So had that box ticked. And then very recently, I'm talking in the last few months, Total sold their Dunga field to KMG, which is Kazmunaygas, the national oil company. Now that's quite a big field, and they paid 330 million for 60%. So they valued the field about 550 million. But again, a healthy, maybe not $5 a barrel, but certainly around three US in ground. So based on reserve base. So both of those sales, one was obviously a significant size field by the national player, and one was more of a smaller sort of play, more probably akin to what we'd be sort of looking at. So they're the sort of numbers, 3 to 5 in the area. And then at a broader level, there are sporadic sales in different parts of the country. But those fields tend to, I think what you've got to do when you're doing comparatives, you've got to get like for like. Some of the plays are much, much bigger neurology plays up in the pre-Caspian. They're going for big, reserve bases and whatever. So, they are what they are, unproven. But if you get lucky, boy, it's going to change your life. Through to more kind of where I'd say where we're at, which is, yep, there's opportunity to grow the reserve base, as Keith has said, and there's no doubt. But it is what it is. It's onshore, meat and potatoes. It's not billion barrel play stuff. It is more the OMV type sale. So they're the comparatives. But in all cases, in the area that we're based, the majors are present and already have significant holdings in other fields. And in some cases, those fields are beginning to see the end of life. So we're quite confident that they'll be wanting to increase their reserve base over time. So we just need to keep getting all our regulatory environment, get all the things that we've been doing, our gas infrastructure stage 2, etc., in place, and keep just chugging away, drilling, and ensuring that we're on people's radars. That's the key now. Plus, obviously, surviving and making a bit of money. Yeah.
Now, talking about being on other people's radars, and I'm not going to try and trip you up here because nothing has been disclosed, so clearly nothing of a material nature has occurred. But how interested are those around you, both in country and out of country, in terms of what you're doing, the value you're creating, and how they may fit their own M&A plans going forward?
Well, who knows what their M&A plans are, but I think the trick is to ensure you're on people's radars and you're talking to people regularly, and I certainly do that. Yeah, so all the majors that are near us, we're in dialogue with for one reason or another. We're either partnering with them on something anyway, so they're well aware of us, or we're here. Hi, how you going? Catch up. Send out the CPR announcement. Hey, just letting you know, and we continue to do that. And their responses are generally great. Thanks, Geoff. Good to know things are going well. Let's catch up. You just got to keep the dialogue going. Their specific internal planning, who knows? But I think everyone knows that in most cases, the fields that they've currently got, they came in and invested in the early 2000s. Now we're in 20 years on. Those fields are what they are, and so I guess it'll be interesting to see. For me, it'll be interesting to see what the majors decide to do, whether they decide to stay in country, i.e. invest further, or they walk away, and time will tell. But I sense most of those players, whether they be Koreans, Chinese, whatever, will end up staying. I don't think they're going to depart Kazakhstan. Yeah.
Final question. What's the end pitch? What's the last thing you want to leave people watching today, or people watching the recording? What's the elevator pitch to let people know, now that you're telling the story, you're out and about, you're investor ready, what do you want the investors to know?
Yeah, and it's probably a recap of the elevator pitch slide. I mean, basically, we're here, we're in country, we're up to date, we're valid with our licenses, recent CPRs, etc., confirmed reserves, show we're underdone in terms of value. We've got a clear plan in terms of upping production levels and improving cash flow. That's what we're about doing this year. And I guess the message now is, I'll do my best to ensure that with that story in mind, we'll keep the market updated, working with the likes of yourself. We'll deal with the issue of liquidity, which has been raised and understood. I hope existing shareholders will see upside over time. And those that are interested in the story, will choose at some point to say, hey, maybe this is worth an investment. So the objective right now is, to continue the good work and to ensure that our, the PR side of our business is much improved. Yeah.
On that note, thanks, Geoff. Thanks, Keith, for the presentation. Thanks, everybody, for tuning in. Remember, a copy of this presentation has been lodged with the ASX, and if you'd like further information about the company, please read the relevant filings on the ASX platform or the company website. Thank you to everyone for your time tuning in and to listen to the presentation, and to Geoff and Keith for their insights. Thanks, guys.
Thank you.
Thanks, everyone. Have a